Hey guys, what's happening? We are live, and there's a lot going on in this world right now. So I thought, rather than have an agenda and talk about things that you guys might not want to talk about, why don't we just lay it out there and just talk about whatever you want tonight? So that's what we're gonna do. And if this thing lasts 5 minutes, then it'll last 5 minutes. If it lasts an hour, it'll last an hour. So hopefully it'll be of benefit to you, and obviously it's got to be of benefit to me, or I won't stay on. So anyway, so what's going on out in the world today? We've got a ceasefire that's been announced between Israel and Iran. So we got that going on. That's a big deal. We've got all the bombings that have been happening. We've got what we thought would be the what do they call it, the Strait of Hormuz or something like that. There was some potential of that being shut down, and so there's just a lot of uncertainty out there. And so I was really expecting this morning when I got up, that the oil stocks would be way up because of the uncertainty, but they actually went down today. So, that's why I don't try to time the stock market. I don't try to time my stock purchases. I do buy when I think the stock is undervalued, but not because of what's going on in the economy or in the world. So where do we go from here? I thought maybe to kick it off, I would ask you guys, what is on your list to buy, or what are you buying? And if you're not buying, what is it that you're looking at buying? And I'm going to turn my ringer off so it probably doesn't distract you guys, but it does distract me. So, and then, so let's just talk about stocks tonight. If you, if you want to do that, I'll do my normal customary thing of looking them up on the apps and giving some thoughts on them. I don't know a lot about every stock, but I know a lot about a few stocks. I know a little bit about a lot of stocks, and I know nothing about some stocks. So you got that. All right, so let's do this. I don't think I've added that to the stream yet, so let me do that. Share the screen. Okay, here we go. So here's the portfolio today. Today the portfolio went up 0.68%. S&P was up 0.95, and Dow Jones was up 0.88, and NASDAQ up 0.94. Last week we were down 0.84% for the whole week. And year to date says we were up 2.93. I think that might be excluding some dividends. So let me check real quick. Yeah, 2.99 is the actual. Let me. This is the chart that I use to kind of measure performance. You can see here that the green bar in this chart is my portfolio, what I call the Wealth Circuit investing portfolio. It is 2.99% year to date on a total return basis. And what I do is I track the year to date for my portfolio, for the S&P 500, for NASDAQ, Dow Jones, Russell 2000. And I have that on a weekly basis. So the year to date number on a weekly basis for the entire year. You can see that early in the year, we weren't doing so well. We were kind of in the bottom of the pack, but then once all the uncertainty came about, we floated to the top. So we are currently performing pretty well. We're 0.8. Let's say it this way. Let's say it the correct way. We are 87 basis points higher than the S&P 500 on a year-to-date basis. So, yeah, we got that going for us. And maybe tomorrow we're behind, but for right now we're in front of it. And again, we look at this on a long-term basis, not just on a month-to-date, year-to-date basis. And so I do that, but I don't share it every time. But I do kind of keep track of it on a daily basis, actually, or weekly basis for sure. Okay, let's see what happened in the portfolio today. Can you guys see that? It's pretty small, isn't it? There we go. Let's make that a little bigger. Here, I'll do that. All right. So you can see that, wow. So let me just tell you this. So I have been processing the first honey of 2025 today. And so I looked at the market early on and I didn't look at it later. And man, Google was down, I don't know, quite a bit. And it only ended up down 0.87. So some of this I'm seeing for the first time. So down 0.87, that's not so bad. Amphenol, my buddy Shaping, is also in Amphenol, and we're up. Man, that's up 42%. Check that out, 42% since we bought it. And I think I started buying it back in January, maybe February. So it's been a good one. And I think he posted out in the Discord today that Amphenol is at an all-time high, or at least it hit an all-time high today. Don't know if it closed at an all-time high, but yeah, it looks like it over 95. So that's fantastic. And if you're not in the Discord, you should get in there. We do talk about stocks and stuff like that between live broadcasts. So there's a link, I think. If not, there will be after the broadcast. There should be a link in the notes that will get you to that. It's free to join, and you just come in and contribute. That's all we ask, is that you to contribute to the conversation, and that we grow together as we try to figure out this whole thing about growing our investments. So let's see. Atmos Energy. Has been really a good investment for me. It's up 57%. I've held it a lot longer than Amphenol, but 57% ain't so bad. Carlisle, I just got into this year. Now, ConocoPhillips, and what are some other oil stocks? I have EOG. How'd they do today? They were down today. This is my day change here, this column. So the oil stocks, Conoco, Phillips, EOG, and Hess Midstream were all down. And that's what kind of drove me to underperform the S&P 500 today. I don't think there was anything else dramatic. But there was a lot of stocks up over 1%, like Stanley Black & Decker was up, U.S. Bancorp was up, Verizon's up, Visa is up, WEC is up. That'd be we used to call it We Energies. I think they like to be called WEC now. But anyway, Microsoft was up. That's good. They've been struggling a bit lately. They're up 1.8% today. So anyway, we had a lot of good performance, drugged down by our friends in the oil and gas industry. So that's kind of what's going on in my portfolio. I think that's all you guys care about at this point. So I'm going to come back to you guys. Let's find out what you guys are looking at and see who all's on the broadcast tonight. We've been on for 8.5 minutes. I thought that said it was 8:30. I was like, dude, that's an hour and a half. I don't feel like I've been on here that long. All right, so we got Pat here. Pat is good evening. Your thoughts on T. Rowe Price, if you have time tonight. Yeah, let's take a look at T. Rowe Price, because I do own them. You can see from I didn't mention them earlier, but I'm up about 8% on them, and 0.84% up today. They're only 1.2% of the portfolio. I own them not from a growth perspective, but from an income perspective. So those of you who follow me know that I have my portfolio kind of split up between after tax and tax deferred. And the after tax is what I use for supplementing my income with dividends. So if there's a company that I like that is solid financially, that's paying a really decent dividend, I'll pick them up for the income piece of that. Hess Midstream is an example of that. I picked them up for the income that they bring. And then I believe that they're undervalued. So over time, maybe a long time, but over time, I do expect them to recover. So we will take a look at that. Let's just do that now. What else we got going on? Nothing. Stocks. That's what we got going on. All right, I'm going to hide you, Pat. And then I'm going to, what am I going to do? I'm going to go to my stock listing here. And I'm going to get rid of everything except T. Rowe Price. Let's take a look at it. See what we got. This is my handy dandy spreadsheet that I use to not only track my investments, but to track which companies I want to invest in. So you can see here that I do own T. Rowe Price. I think you can see that, right? I do own T. Rowe Price. I have it rated as a hold right now. I believe that and it's about 1.2% of the portfolio. I believe their annual return potential is about 13%. That would be total return, dividends, plus capital growth. The analysts are saying it's more like 5%. They're expecting T. Rowe Price to grow about 5%, which is roughly the dividend. So I think they're expecting T. Rowe to remain pretty much flat from its market price. So let's see what Morningstar says. They have a narrow moat. They are trading at about 83% of their fair value. They do have a return on invested capital of 17%. That's pretty solid. So I think that's good. They have a high uncertainty rating, so you need to keep that in mind. Their dividend safety is an 80. That would be considered safe by Simply Safe Dividends. Their yield's 5%. So if the analysts are saying 5% and their yield is 5%, the analysts are saying they're not going to grow at all. But I don't always trust the analysts, right? So dividend yield's 5.4. They do have some buybacks. Their buyback yield is about 2.3%, which makes their total shareholder yield about 7.7%. I kind of like that. It's a good spot for me. But you can see that dividend yield of 5.4%. I think that's attractive. What I do know about T. Rowe Price is they have solid money managers. They got trapped a bit in mutual funds. So for quite a while, they didn't make the transition into ETFs. But I will say they have been doing a nice job recovering from that and getting into the ETF market. But as we all know, if there is a recession on the horizon or if the economy doesn't grow like we thought it would at one time, T. Rowe Price is going to suffer because stock prices will suffer. Their net asset values will drop, and so they will suffer a bit. But I don't think there's anything wrong with T. Rowe Price. I like what they're doing with their ETFs, and I do believe long-term in the health and the growth of the stock market. So I think long-term they're going to do fine. I don't mind picking up that 5.4% dividend yield while I wait. So, but again, I'm not betting the farm, Pat, on T. Rowe Price. 1.2%, not a huge bet, but I think it's decent, and I like the stock. So you got that going for you. So what do you think, Pat? Are you thinking about getting into them, or what are you thinking? Those are my thoughts on T. Rowe Price. And it only took 5 minutes. My buddy Russ would say I talk too much, but I think it's just the opposite. I think my buddy Russ talks a lot. So, all right, Steve C., good evening. Let's open an account for those bees. Yeah, absolutely, man. I went out and I got into my beehives yesterday. And for those of you who don't know, I have 8 beehives. 2 of them aren't doing so well. I'm not sure if they're going to make it or not. But currently I have 8 beehives. I've got honey supers, what they call honey. It's the honey boxes on 3 of the hives. And I went ahead yesterday and pulled some of those frames off and, spun them in the extractor today. I've got it going into my honey bottling equipment now. So it's really kind of fun. And I've got a video. I tried to get on here and it wouldn't upload it because it's got to be an MP4 instead of MOV because I had it on my phone. But I'll tell you this, even if I put the video up here, it doesn't help you with the aroma of that fresh honey coming out of that comb. It smells so good. And I mean, it's just really a nice environment to be in. So anyway, I'm doing good on the honey side. So matter of fact, I've got some honey deliveries to make tomorrow. You guys want to know how much honey I'm delivering tomorrow? I do. So let me look. Hopefully this will kind of give a sense for how big the honey business is getting. Yeah, so tomorrow I will be delivering about 360 pounds of honey, which is it's quite a bit. So 360 pounds of honey. So I've got to get that loaded in my truck. I've already bottled it. It's in the cases. It's ready to go. I just got to get it loaded up in the morning and go on my route and take it to my stores. So kind of keeps me busy. All right. So let's see. So yeah, I've got a bank account open for those bees. How about that? Because they'll pay me for this honey tomorrow. What's going on with all the food stocks? Pepsi. Now, who is CAG? Oh, that's ConAgra. ConAgra and General Mills are all down. I haven't been watching them, but I think Pepsi is related to all of this stuff with Robert Kennedy and, the health side of things. I think Pepsi is taking a hit from that. General Mills tends to be more on the sugar cereal kind of side of things. So that would be a challenge. Now, ConAgra, I don't know what's going on with ConAgra. Let me take a look. Let's see. CAG, ConAgra. Wow, for the last year, Claudia, they are down 26%. Oh, let me show you guys this. Rather than me just saying it, I will show you. There we go. Look at that. 26% for the year. They're currently at about $21.61. Let's see what these guys say. While they are borderline safe at a 41, that might be problematic. I don't know why that is, though. They haven't grown their dividends since July of 23, although it's got a nice five-year CAGR. It has been flat. Oh, man. What's going on with ConAgra? Let's look at some financials. Looks like they're projecting their earnings to go down because their earnings payout ratio is going up. That's not a good sign. Yeah, look at this going down. Going down. It went from 277 to 267. The last 12 months is 235, and the next 12 months, 220 per share. Now, they're still making money. But what are they paying per share? They are paying, let's see, $1.40. So, I mean, it's not bad, right? It's about 60%. It really depends on what you think the future is. I don't know enough about ConAgra to know what I think their long-term potential is, but they are struggling on the earnings side. Looks like their sales are pretty flat. Their return on invested capital is not that impressive. Net debt to capital is not bad. Interest coverage ratio is not good. So they've got a lot of debt, it looks like, And now, from a PE perspective, which I don't look at a lot, but PE, ConAgra is 9.8, and their peers are average about 17.5. So is it a good deal? I don't know. Let's see what Morningstar says in terms of their long-term fair value. ConAgra. Oh, it says I'm not a member. Huh. Let me do this. Let me sign in for you guys. It's not letting me sign in. Okay, now we can do this. We've got this. We have got this. Let's look at ConAgra's fair market value. It's trading at a 25% discount, they say. The fair value is around 28.5. It's trading around 21.5. So looks like there's some potential from the long term. I don't know what's causing this. Reinforced acquisition. However, the food is competitive, and we don't think it has a portfolio of enough leading brands or entrenched retailer relationships to drive pricing power. So what they're saying is they think that ConAgra is in more of a commodity business than they are a price driving or a retail position. So I think that's what's going on. I think I don't know how to predict the future for them. I understand why the price is low. I don't know enough about them to tell you if I think it's going to come back or not. So that, I think it's probably related to them being a commodity business. So those are my thoughts on those three. But I will tell you this, and I learned this from the school of, what is it? Hard Knocks. I think it's the school of Hard Knocks. Is not everything that's cheap is of value. So just because a stock has dropped dramatically in price doesn't mean it's a good value. Why do I say that? Because investors know more about the stock than we give them credit for. They don't know everything, but they know more than we give them credit for. And we have to, in our own minds, have researched enough to know when we think the market has it wrong. And I don't know enough about ConAgra to know if the market has it wrong or not. But, obviously, Morningstar thinks that they do. But I don't know. I don't know enough about, so whatever is there, is it going to last for a long, long time? And it seems like investors are not real high on ConAgra at this point. Yeah, if that ceasefire lasts 5 minutes, we'll see. Unfortunately, none of us can control that, but it is what it is. Hello, Mr. Swami. Man, it is good to see you tonight. It always brightens my day when I see you on here. Let's see. Looking to stay with ETFs for a while. SCHD, VYMI. Those are good, Claudia. I think that's good. And in the meantime, you can start, researching if you're interested in individual companies. And not everybody is, and it's okay if you're not. You can stay with ETFs forever, and I think you'll be fine. If you got a lot going on in life and researching stocks is not your thing, then stay with ETFs. I think those are great. They give you instant diversification, and you got some people, or at least some hierarchies out there that are buying stocks based on certain criteria that, has been a proven winner over a long period of time. So I think that is a good strategy. And if you like, you can play around researching particular companies, maybe pick one or two if it's something that you're interested in. and just follow their quarterly earnings calls, any kind of announcements that they make. Try to understand their strategy. How are they going to make money? Not only how are they going to make money, but how are they going to grow their business? So that's one thing. Second thing is look at their management team and look and see if they have the people who can drive the business forward. And I'll tell you, those are some of the biggest mistakes I've made, because that is a daunting task. How do you how do you rate the people who are managing a business? It's hard to do because we don't know them. All we know is what we see in the annual reports or in the quarterly reports. So it's about strategy. It's about management team. What's the capital allocation? How well do they allocate capital? Are they in a lot of debt? Do they have a decent payout ratio? You kind of get what I mean there about capital allocation, because they have, so the cash that comes in at the end of the year, they have a pot of cash that's left over if they're making money that they earned. How are they then using that cash? Are they giving too much of it to shareholders, or are they investing in the business to grow the business, and whatever else? So just make sure you understand the capital allocation and how well they're doing. And then fourthly, look at the valuation of the company. Do you think the company is at least fairly valued and preferably undervalued? And there's one other that is escaping me at the moment. Anyway, I'll think of it in a little bit. But those are the things that I look at, plus one, and I'll think of it in a little while. Perhaps more SOBO, and even though it's crazy, I think WU is oversold. So SOBO, what is SOBO? Let me look that up. SOBO, South Bow Corp. Here, I'll share this with you guys. I'm not familiar with them. South Bow. Says there's some downside here from an analyst perspective. Let me look at an overview here. They're up about 20% in the last year, about 15% year to date. So that's not too shabby. Let's see what these guys have to say about them. They've got a borderline safe dividend safety rating. Oh, they're Canadian, so there's a Canadian tax on dividends. That's it's not terrible. I just don't like to mess with it. Life's complicated enough, and each individual stock is not complicated on its own. But if you have a bunch of them, yeah, it turns into a complication. Let's see. Dividend safety payout ratio is not available. Why is that? It says it'll be 80% in the next 12 months, so that's not good. About 99% free cash flow from their free cash flow payout ratio be about 100%. So, yeah, I don't know. I'd need to see more about that. Just looking at the numbers, I don't feel comfortable with it. It's an energy infrastructure firm that transports crude oil across roughly 3,000 miles of pipelines. These pipelines connect Alberta's oil supplies to U.S. refineries in the Midwest and Gulf Coast, facilitating the movement of oil for processing and sale. This essential business is backed by long-term contracts and credit-worthy customers. So I don't know. That might be something that I would want to look into. It's about a 7.5% yield. It's a midstream service. I use Hess Midstream for that in my portfolio. But 7.5% dividend yield, it might not be bad if you're looking for income. But again, for me, it's a Canadian stock, so I probably wouldn't. But if that doesn't bother you, I think it's not a bad call if you need the income. What was your other one? WU. Woo. WU. Western Union. Yeah, because that was in Back to the Future, right? Wasn't it Western Union that came and said they'd had that envelope for many years? And so, what are you guys drinking tonight? I'm drinking. Looks like lemon water. It's actually Dasani water with that Mio squirt of lemon in it. So it's pretty good. It's so hot here and humid. I bet I've drank, I don't know, 10 bottles of water today. Just been hot. Let's see here. Overview. While they're down 16% year to date, they are down 32% over the last year. 5 year, it's thinking. And 60% over the last 5 years. Yeah, that might be a dying business. You know what I mean? So let me see what the dividend yield. Wow, 11%. Yeah, this might be what I would consider a yield trap. Because if you got an 11% dividend for the year, let's say that you picked, you were 12 months, you had invested 12 months ago. So in 1 year, the stock is down 32%, but you got an 11% dividend. You got that going for you. So, but your net down about 20%. And so that's why I like total return. I don't look at dividend yield, although dividend yield can be attractive to me from an income perspective, but it's not how I base my decisions. I don't base my decisions on dividend yield, but it might make it attractive for a particular portfolio that I have. But I want it to grow total return over the long term. Western Union does not look like, even over the last 5 years. So let's say the yield was 11%, which it probably wasn't, but let's say it was. Over the last 5 years, that would give you 11%, 11%, 11%. And I know there's compounding on that, but let's just pretend like it's straight. So 11 times 5 is 55. It's gone down 59% over the last 5 years. Still, over the last 5 years, you would have lost 4% of your value. I just don't know. I don't think WU is undersold or oversold. Let's see what our friends at Morningstar say. See if they even rate it. They do. Yeah, they think it's at a 50% discount. So, it's up to you, because the last 5 years have not looked good for them. But yeah, they say the fair value is around 17. Current price around 8.5. So 5-star. You got that going for you. But yeah, I mean, these types of pictures aren't the ones that I want. I don't want stocks who have historically paid less in dividends than they've earned in capital appreciation. At least break even, you know what I'm saying? Then I get the dividend. but if your capital appreciation is actually capital depreciation and it's more than what you're paying in dividends, it's not a good sign. Not a good sign. Good morning from Mr. Billy Johnson. Let me get back over here. Billy is across the big water, so that's why he's saying good morning. And he wants to know, what does your wife think of all the bees in your yard? Well, she, here's a funny story. At first, she was really going to help with that. I have a bee suit for her, and she helped for a little while. But it's not for everybody. And, you get out there. I was telling a guy the other day, he said, I'd love to get out and see those bees. I said, hey, I got a suit, man. You can come on out. And he goes, no, I think that's okay. So, 90% of people don't want to be near the bees. And I get that. And I was out there pulling honey yesterday, and I got to thinking, as they were buzzing around me, I got to thinking about how a couple of years ago I was really taken aback by that. It's just a natural reaction to want to swat them or run, but you're in your bee suit, so everything's cool. So, but what does she think about it? I think she really enjoys the honey side of it. I don't think that she enjoys the husbandry. No, I didn't say husband. husbandry. Husbandry is taking care of animals. I don't think she enjoys the taking care of them piece of it because it's just not for everybody. So, but great question. Thanks for asking it. 45 gallons. I have lost the context of that, Michael. I'm so sorry. I don't know what 45 gallons. Of honey. 45 gallons of honey. Yeah. So let me see. How many? Oh, you mean for my deliveries tomorrow? I can add that up real quick here. Hold on. Inventory, it's 12. Let's see, that'd be 20. Well, so we would take roughly on average, you could take the 360 divided by 12. So where's my phone? That'd be 30. Let's see, 30 gallons. 360 divided by 12. Yeah, about 30 gallons. And the challenge with honey is that, water, that, hopefully you guys care about this. If not, it's okay. You're not going to hurt my feelings, but water weighs about 8 pounds per gallon. Everything that we have in the U.S., quarts, pints, when they talk about ounces, so if you have liquid ounces and weight ounces, they're based off of an 8-pound gallon of water. The challenge that we have with honey is that it weighs about 12 pounds per gallon, somewhere between 11.5 and 12 pounds. It's pretty thick and viscous. So a pint of honey, which actually is considered 16 ounces, is 16 ounces of water, but it's 24 ounces of honey. Imagine that. So that and probably $4 will get you a cup of coffee at Starbucks. I did get a cup of coffee. No, I didn't. I got my wife a cup of coffee at Starbucks this morning. So yeah, that's a good guess. And it would be 45 gallons if it was water, I think. So that'd be 360 divided by 8. Yep, exactly. So yeah, but honey doesn't weigh 8 pounds per gallon. It weighs 12 pounds per gallon. So it's really more about 30 gallons. And if you think about it, it's more than half a 55-gallon drum that I'll be delivering tomorrow. That's a lot of honey for me. For a retired guy, that's a lot of money. It's a lot of money, but it's a lot of honey too. So Pat's at 2% of his portfolio in T-Row. A few of these, their numbers seem to be flat or heading down. Yeah, I think that's right. I think their assets under management is headed downward. But I think some of that over the long term, I think will, if the market continues to go up in the long term, like it has over the last 100 years, I think they will. They'll be okay. In the meantime, I get 5.4% dividend yield, and I'm okay with that. So here's what I like. As you guys know, my target is to get 8% per year in my portfolio, and so if I can get 5.4%, let's say 5.5% in dividend yield, then they only have to get me about 2.5% in capital growth to get to my target. So I think it's going to be okay. I think we'll be fine, Pat. We'll just sit back and draw in the money. Let's see. Yes, sir. Johnny Cash reference. You called it. Awesome. What's a good entry price for Lockheed Martin? That's a great question. Let me see. I do track Lockheed Martin. Matter of fact, I own Lockheed Martin. Not the whole company. I own shares of Lockheed Martin. So let's see. I'm going to pull that up. We'll take a look at Lockheed. I like Lockheed Martin. And how do I share this? There you go. Lockheed Martin. You can see I own it. It's about 2.2% of the portfolio. I think that their projected annual return, total return, be around 11.5%. Let me see here. There we go. Analysts are thinking around 14%. Morningstar gives them a wide moat. They're trading at about 88% of their fair value. Return on invested capital is about 24%. I mean, that's pretty solid. Medium uncertainty and 80 for dividend safety rating. They've got a 2.8% dividend yield, a 3.1% buyback yield, which gives a total shareholder yield of 5.9%. So, what's a good buy-in price? I think, let me get over here to where their price is. So Morningstar has their fair value at $539. My purchase price, check this out. My purchase price is $351. I've owned them for probably 3 years now. I bought them when things were not looking good for them. But the management team I thought was doing the right things. So I picked them up. And actually had them like at 5% of the portfolio at one time. And then as they went up, I kind of peeled some of that off and got them to a normal size in the portfolio. So 539 is a fair value. They are currently trading at 472. So what is that, about 39 and 28? So yeah, I think I mean, they're trading really at a 12% discount, right? Yeah, 12% discount. I'm not sure that is enough. So I would probably say, somewhere in like the 450 range might be a decent buy-in. But I will say this, I mean, they're currently trading at below what Morningstar says is their fair value. And I like your next question too, Legendary. What's a good defense stock to buy right now, in my opinion? So let me flip this and show you kind of how I do this, and it'll kind of give you some insight on why I would select one stock over another, because that was a really hard thing for me. I get emotionally attached to these companies and the management teams, and so it's like, I believe in them. I think they're going to do it. But I needed an objective way to say, yes, there's potential here or there's not potential here. And let me get rid of this filter right here. So now this is everything, right? And I'm going to make sure this is sorted appropriately. Okay. So if I look down this list, the first defense stock that I see is Northrop Grumman. I believe it has a return potential of about 17% over the next year. Analysts believe it's about 10%. They have a wide moat. They're trading right now about 19% discounted. They're at an 81% of the fair value. They have a 13% return on invested capital. And then they have a 90 dividend safety rating. Let me see what Lockheed was. So Lockheed has a 24% return on invested capital. So, but overall, I think, and the ones that the defense stock I have bought most recently is Northrop Grumman, ticker symbol NOC. I own, just for full disclosure, I own General Dynamics, I own RTX, I own Lockheed Martin, and I own Northrop Grumman. So it's almost like I have an ETF of defense stocks. But what happens is that, some of them become more undervalued than others at different times. And so, I just pick up when it's time for me to add to my defense stocks. I pick up the one that I think is the best value for the dollar. I think they're all good, but I think there's, the the way I look at the valuation and the stock itself, I think Northrop Grumman is the best deal at the moment. I mean, it's not a screaming buy, but I do have it rated as a buy in my portfolio. So yeah, hopefully that helps. Hopefully you can. Oh, you can't see that because I'm in the way. There, how's that? That's much better. I should look at the screen more. So Northrop Grumman, you can see that I do own them. They're about 1.5%. And this was a purchase that I made, and I shared on the Discord. If I buy and sell, I'll share it on the Discord. But I bought this probably, I don't know, a couple of weeks ago, maybe. Let's see how it's doing. Yeah, it's up 2% in a couple of weeks. I'll buy that. Oh, you can't see that either. Northrop Grumman. See it right here. Went up 0.4% today. It's up about 2.3%. So, and I've had it just maybe a couple of weeks, a month at the most. So I'm okay with that. Is McDonald's a buy, sell, or a hold? That's a good question. I think McDonald's is going to be challenged because of this whole health kick, right, that we're going through at the moment. I also don't know where their growth is going to come from. I mean, everywhere we go, when we go on a trip, even when I go overseas, I've had McDonald's in Shanghai. I've had McDonald's in Hong Kong. I've had McDonald's in Jerusalem. I've had McDonald's in Rome. I've had McDonald's in Paris. I've had McDonald's in all these places. And I even had McDonald's in Bucharest, Romania. So, where's their growth going to come from? I don't know. It's a bit challenging. You can kind of decide that, but are they buy, sell, or hold? Let me look at some of their numbers real quick first. Here, I'll take you along for the journey. Let's look at my friends at Simply Safe Dividends, MCD, not NCD, MCD. I don't think I track McDonald's in my spreadsheet, by the way. I track 100 companies, but not. And I think I'm going to go through a process here where I'm going to get rid of some of the companies in there to kind of narrow it down so that maybe I can add more. And the reason I want to do that is, the reason I struggle with doing that is, even, how do I say this? Even bad companies can have a stock value that makes them attractive, right? And so just because it's a company that I don't really care to invest in, if it's like really, really cheap and I think the future is bright for them, why wouldn't I go ahead and do it, right? And I've done that before and ended up selling the companies for a gain, but it's not something I had a long-term conviction in, but they were just trading so low. And I think ConAgra was one of those at one time. They had an accounting issue, I think, if my memory's right. So their dividend safety is 77. That's good. They've got a triple B plus rating. And before anybody says that, I understand that McDonald's is really more of a real estate company than a hamburger company. But and so maybe the growth is going to come from their growing portfolio of real estate. But I don't know. We'll just have to see. Their payout ratio is 59%, 6%. That's a pretty nice dividend growth. Let's see what their what McDonald's is in Morningstar. They're fairly valued. They're roughly $20 below their fair value, so they consider them within a fair value range. So I think I would say right now for me, if I held McDonald's, I would consider them a hold. I wouldn't buy more at these prices. I wouldn't sell at these prices. I would just hold it and let it grow. And that's kind of, I don't know. That's where I'm at. Mike in Milltown, New Jersey. Hey, you're not late, Shannon. You are just in time. We can get started now that you're here. I think I'm kind of behind. So let me let's see, what time is it? Yeah, I'm way behind. So I'll catch up here pretty quick. And 92% of professional fund managers fail to beat the S&P 500 over a 20-year period. Yeah, that's right, Russ. And I hope to make it 20 years, but right now I'm sitting at. So I started my portfolio, as you know, after I retired, because I was just too busy in the job that I had to look at individual stocks. But and right now I'm outperforming the S&P 500. It's been about 4 years? Is it 4 or 5? 4. It's been 4 years. So I'm okay with that. I mean, hopefully I get 16 more. And if I can make it 16 more years and be anywhere close to the S&P 500 with all the fun that we've had, doing live streams and stuff like that, I call that a win. But you are right. A lot of times just doing the S&P 500 is a great way to go. That's what I did in my career. I just set it in the S&P 500 and let it go. How's your French fries French fries company doing? And are you still owning? And I do not. I sold off my investment in Lamb Weston. They had dropped. So they had a failed ERP installation. So I thought, man, that's a great time to pick them up. Stock plummeted, picked them up, and then management made another bad decision, and then they made another bad decision. And so, I was talking about management teams a while ago, and it's hard to really understand whether they're going to do well or not. That was one that fooled me. I thought they were a good management team. They had just made a mistake, and they were going to really show people, But no, they kept making mistakes. So the stock dropped, and then it jumped like by 10%. I forget what it was. It was they were maybe going to get acquired or something like that. So when it jumped like 10%, I sold it off, and then that quietly went away. There was no merger, and so the stock went right back down. But so yeah, I'm not in them anymore. So I have no idea how they're doing. Hey, good evening, Fast Eddie. It's good to see you, buddy. Yeah, you got it, man. You got it, Michael. NATH. Oh, wait a minute. Before I do that, Rust Moments. My friend, he also goes by Shaping. He's in Amphenol with me, so it's good to see you tonight, my friend. What do you think about Nathan? Is that Nathan's Hot Dogs? Let me take a look. I think that's Nathan's Hot Dogs. And I like hot dogs. I'm just, and they're great every once in a while with, I like chili on mine. I don't like onions, but I like mustard and chili. But I don't know. Let's take a look. Looks like they're pretty fairly valued. Let's see what my friends here at Simply Safe say. Oh, they don't pay. Yeah, they have a dividend. It's pretty small. Earnings payout ratio looks pretty decent. I don't know much about this company. I do know they sponsor that hot dog eating championship. Russ, I would love to see you doing that. You'd be up there competing against what's his name? I forget the guy that it's on the tip of my tongue, who eats like 60 hot dogs in 5 minutes or whatever it is. You should do that. I want to see you like July 4th. I want to see you in New York City or wherever that is. It's on the shore of New Jersey, I think, pounding those hot dogs, man. I want to see you beat him. Return on invested capital, man, it's a killer. Return on equity sucks, but return on invested capital looks good. no net debt. They've got pretty decent interest coverage. Yeah, I mean, I think they look okay. Their dividend growth is pretty slow. The last 5 years is 7.4, but looks like it's flat. Yeah, I don't know, man. It's a restaurant business. It's a food business. It's that can be really fickle over time. So I tend to stay away from them. But I mean, it looks decent. I mean, the financials look fine. So what do I think about them? And have I ever used it? I have eaten Nathan's hot dogs that I've gotten at the grocery store. I've not been to one of their stores, like at the, what do they call it, the boardwalk in New Jersey, but I have eaten them from the grocery store, and they're good. They're fine hot dogs, but I don't know. It's just not my cup of tea. But yeah, unsweetened iced tea. Oh, Fast Eddie's drinking some iced tea. That's good. Zelle, Square, Venmo, and I'm sure many others are far less of an issue to access / utilize. Yeah, exactly. How do all those work as far as internationally? Oh, I'm going to skip that conversation. There we go. All right, 45 pounds of honey. Have you seen your bees drink water? Oh, yeah, absolutely. Bees need water. I have out by my barn, I have one of those 100-gallon cattle waterers, and it's really fed from we've got gutters in the barn, and so that one of the gutter spouts hits that 100-gallon water tank, and I have a screen set across the top of it because bees can't swim. So if they fall in that water, they will drown. But I have a screen material over the top of it, so as the water goes down, in the summertime when it's not raining very much, the water will go down. That screen will go down with it. And when it rains, that screen will come back up. And so the bees can land on that and get a drink of water. Water is extremely important for bees. And I know that you got the laughy face, but it's a big deal. Water is a big deal. If you have beehives, you better have a source for water. Let's see here. Yeah, Russ says and I'm catching up, believe it or not. Russ says his Lockheed Martin is at 337, but only 10 shares. I must say the NOC has caught my eye, though, and might have more government contracts coming their way. Yeah, and I think, Russ, what kind of intrigues me about them is they are currently working on a next generation software, and I don't remember exactly what it does, but hopefully they do. And it's they've had some struggles with it. They've had to write off some things related to it, but I think they're going to get it figured out. And again, this is the management team competency thing again. I think they're going to get it figured out. And when they do, I think it's going to bring additional value to NOC. So I think they're being beat up right now from a price perspective because of that, but I think they're going to get that fixed over the long term. And I think we're going to be happy with it. So yeah, and that is a problem, Michael. There are some people who are allergic to bees, and so I have to be real careful if I have people come look at them because if they're allergic to them, I don't let them anywhere near them. So, and they shouldn't want to be anyway. All right, let's see. Yeah, my buddy Russ says McDonald's is never a sell from a long-term point of view. I think that's right. I mean, I think they're a hold though. Let's see. Da-da. A lot of discussion about Rick. Yeah, Steve says when we finally get to McDonald's, they can open and when we finally get to Mars, they can open a McDonald's there. That is absolutely right, man. uh, let's see here. See if there's anything else exciting. So Fast Eddie here says that Tesla had a good day. So let's take a look at my friends at Tesla. I don't own Tesla. I don't own a Tesla either. Why is that? Because I like my pickup truck because I use it to carry B equipment. But also, we tend to take long trips when we go on vacation. And I just don't want to sit around and wait for a car or a truck, for that matter, to take all that time to recharge. Yeah, wow, they were up 8% today. Man, that's fantastic. You excited about that? Does anybody own Tesla? Yeah, here, let me share this with you. The analysts are saying they've got about an 18% downside. Wow. Wow, it was up over 76% on a 1-year basis. Year to date down 20% though. Look at that big spike right there, and then it came down. But yeah, no, that's fantastic. So that's good news. David is yeah. All right. Yes, sir. I wisely avoided all the Rick discussion. I almost got pulled in there at the end by my buddy Russ, but I have successfully avoided all of those conversations, and we have successfully made it to the end of our live stream tonight. So I appreciate you guys joining. Again, if you want to be in the Discord, just click the link below. And I hope it all goes well this week with your stocks, with your portfolio. And I will not be here next week. I will be at the beach on one of these long trips that I talked about. And I will not be carrying my camera and all the equipment with me. So I will miss you guys next week, but I will be back the following week. So hope you guys have a great week and stay cool, stay dry. And we will catch you on the next one. Hope you guys have a great week.